Good morning, all. Welcome to the pre-market report of June 21st. I'm Binu from Acumen Capital. Today, we can see green color across Asian markets, especially Japan, Taiwan. These markets up by more than 1.5%. And Singapore Nifty is showing a gain of somewhere around 55 points. So yesterday was a holiday for US markets, and today morning the Dow Jones futures trading with some gains. But actually last week was a down week for US market. The major indices down by more than 5% because the economic data shows that low consumer confidence in US, retail spending are lower, new home constructions are again on the lower side. So all this data shows recession is on the way in US, and that is why US markets were down last week. This week the market is expecting some more economic data, and today the existing home sales data is coming in US, and on this Friday the consumer sentiment data is coming. So both these data will give some indication about US economy. And another factor to watch, on Wednesday and Thursday, the US Fed chairperson is addressing US Congress. So he will explain his further strategies to control inflation. So his speech is important for US market. Yesterday, all the European markets ended higher by more than 1%. Especially the banking stocks moved higher. The banking index moved more than 3% in Europe yesterday. And crude is steady at $115 per barrel. So these are some of the factors to watch from global markets. But coming back to India, the thing is that yesterday the indices, especially Nifty and Sensex, ended higher. The rally was supported mainly by FMCG companies. Hindustan Lever was up by 4% yesterday. The reason is that since crude prices corrected 6%, it may help FMCG companies because their transportation costs will come down, and their packaging costs will also come down since crude is down. Another sector, that is paint companies, also moved up yesterday because of their raw material price may come down since crude is down. But another factor to watch is that when Nifty and Sensex were up yesterday, the small cap index was down 3% and mid cap index was down 2%. And that is the main headline in all newspapers today. So the underperformance of the broader market is the problem. Yesterday, the advance decline ratio is 1:6. That is, for every one advance, 6 stocks were declining. So, one more main factor to watch, the mid-cap index, you can see in this chart, mid-cap index was at 33,200 in last October, and it came down to somewhere around 25,000 level yesterday. So around 21% corrected mid-cap index. So mid-cap index is into a classic bear market, whereas small cap already in a bear market. That index down more than 30% right now. And small cap index is at 15-month low, whereas mid cap index is at 13-month low. So since the interest rate hike cycle is there, the large cap may have an advantage right now because on a higher interest rate scenario, the mid cap may face more margin pressure, and that is why people are throwing away their mid cap stocks at whatever level they are getting in the market. So this trend may continue for some more time, and more fund allocation may go into the large cap stocks as of now. So this is one important area to watch. Regarding stock specific things, two order news there. One is KC International, they got an order of somewhere around 1100 crore for their different subsidiaries. Then ACE, Action Construction Equipment Company, they got an order of 25 million from Ghana. Then there is a news for S Bank. It is in advanced negotiations to raise $1 billion from foreign FIIs like Carlyle, Advent International, etc. ICC Bank, there is another news. US-based private equity company, that is Apollo Global Management, is reconsidering its asset reconstruction company joint venture with ICC Bank. So that is another news to watch. Today also, the stocks related to crude price movement may show activity. Regarding the main index, Nifty, you can see in this chart, last 2 days, there is some bottom formation because the day before market, the low came is 15,183 and yesterday's low is 15,191. So almost similar bottom, and you can see something like a doji formation. This is not exactly doji as per the classic definition, but something like a doji formation for last 2 days, and it is getting support at 15,250. Yesterday multiple times market took support at 15,250, 252 level. So market is trying to get some support here. So today and tomorrow we have to see whether it can move towards this 15,600 level. So that is important. And for today, the critical level on the upside is at 15,421. So after the initial volatility, if market can sustain above this 15,421, then there could be more upside movement. So for this, the first resistance is at 15,514, and on top of that, the higher resistance comes at 15,590, and the major resistance for the short term as of now, it is around 15,670 level, which is the March 8th low. But if market cannot sustain in the morning on the higher side in the morning session, then there could be more selling pressure later today. The first minor support comes at 15,316 level, and below that, once again market may try to get support at 15,252 level. Below this, the next support, that is also a minor support, that comes at 15,170, and the major support for the day comes at 15,125. Thank you for watching. That's all for the day.